Good day, traders. Stacey Burke from Stacey Burke Trading. Going to go over 4 first-hour trade setups that I did take on gold. 143 pips in Asia, London, New York, and Asia this morning. And again, we'll go over these setups in detail, and we'll show how each setup was the same. The preparation, the process, and the trade management was the same for each trade setup in that first hour. There were other trades that came out of that after that first hour, but again, just emphasizing the opportunity in that first hour, and for me also the importance sometimes of once you've had a really good trade, although there may be other setups, I'm quite happy to walk away, lock it in, shut it down, and be done. And grateful that the market has offered me that opportunity, and if I've been able to successfully extract pips out of the market. And again, we talk about scalable trade setups. So heading into Monday morning, yesterday, first thing I always do, I talk about this, is the 4-hour high and low. Now this lower rectangle, my 4-hour charts start at 2100 chart time for the last 4-hour bar heading into the U.S. close. Now obviously I have stops above the high and stops above the low of that 4-hour range. And as we talked about, we have a structure, a geometrical structure, a rectangle that broke out towards the end of that session. And the gap opening is the breakout. That's technically a bullish bull candle breakout through into Monday morning. And again, triggering not only 4-hour traders in that breakout at the close, but we also hit stops and breakout orders on the previous 4-hour high-low. Excuse me. So when we come into this session on Monday morning, again, I'm talking about trading that first hour of the 12-candle window. And again, there's other trades, but if I'm successful and the setup is there in that first hour, 25 to 50 pips, I may walk away. The U.S. session, depending on the setup, I may not trade at all. Or I may trade that first hour, depending on how long the day's been and whatnot. Sometimes I may stick around for longer, but we'll go through the last 4 session opens, the trades that I took, and what I was able to take out of the market. And again, not every trader is going to do the same thing, but in live time you make decisions, and also as you've been following, we'll look at the pound and the euro. Very similar setups. I draw the high and the low. So I have my breakout high from the U.S. session high, but you'll also notice that became the low of our first and second hour. Now our first hour made a high. They auctioned down in 3 pushes into the beginning of that second hour. And again, just simple understanding. The first hour made the high. The second hour then proceeds to go lower and make a low, but then it also breaks out of our lower boundary for a lower a pattern within a pattern, as Peter Brandt calls it. So we have 3 pushes down, 1 push, 2 push, 3 pushes. That also gives us 3 levels of lower highs. And so now we have a bias heading into the session open. Now again, I did not trade the open of this, but I did trade the sell trade setup at the beginning of the session. And traders, again, the breakout of that range was an opportunity for traders to trade long. Again, with the thesis being going back and hitting stops either at the high of the day or that lower high at double zeros. So traders who are in long, again, your 1 push, 2 pushes, 3 pushes to the high, which is where I am paying attention. We've gone 3 pushes to the high. We get our little bar, and this is what I look for constantly. We're going to show a few examples of this from this day's trades. This little bar, the market goes into consolidation above double zeros, and we have this middle structure bull candle. So I'll blow this up a bit. So we have a low, a high, we have a breakout, we're above double zeros. And again, I'm looking for a first hour opportunity. This trade in the long direction, again, you're trading with trend. It's an opportunity to participate in the move back to the high. And again, some of these setups may just be bread and butter trades. You're not going to necessarily pile a lot of size onto them, but they may be high probability, high possibility opportunities, but maybe the asymmetrical risk reward may only be 2 to 1. So again, I may take these trades, but I'd be managing them with a certain amount of risk that I'm comfortable in a 2 to 1 type setup. So if we're in a 10 to 1 or a 5 to 1, well, that's obviously going to maybe attract increased size and depending on the setup. But this particular setup, I was looking for 3 pushes into the high, the small bar at the peak, and then our middle structure candle, the middle bar that gives us our M formation. We get the second push to the high and then the bear candle, which is where I'm looking to short up inside of that right shoulder. Now this trade gave me an entry just below the 17,110 area. And again, I looked at this and felt we obviously had stops on traders who were long on the swing. The market very rarely, if ever, does not come back and put heat into traders who are long on the first bar. So this is an important concept to understand. This particular trade yielded 31 pips. So again, we're 30 minutes into the session, short up top on the break, down through that third push to the high, our middle structure, break even when the market broke back inside of the 00 area, and out with 31 pips in 5 minutes in that trade. And again, understanding that this market did obviously give another trade setup later, a second hour trade. So not only did we have a follow through long trade, but we had 3 pushes up to the high for the sell scenario, back down for 50 pips. For traders who may have sold up top, maybe 25 to 30 on the second leg on the vertical capitulation move. And again, for me, ideally, if I'm getting 25 to 50 pips in that first hour and it's a simple trade setup, occasionally I will stick around, but often, especially for Asia, usually there's going to be a 50 pip move. Again, they're putting a high in place, and as we'll see later in the day, this ended up being a 3-peak formation to form the high of the day. So again, some traders may make the decision to hold on to partials for 3 peaks in Asia. They may have a thesis that this could be the high of the day. We came out of a day 0 scenario. So again, when we head into our next 12 candle window for the Europe London session, we have 3 peaks from the Asian session. This is our box Friday high-low. This was a narrow range day, a day 0 potentially. If that market was going to trend, it should have broke out, pulled back, and continued on Monday morning. We had 3 pushes to a peak. Then we have a doji in the middle structure coming back inside of Friday's high-low. The middle structure is engulfed on that right shoulder in the last 15 minutes of that Asian session at 50. This is an example of where I was in the market just prior to the 12 candle window on this market breaking down through the 50 level. My stop was placed above that range, and the market immediately fell and continued to fall into the open of the session. So again, this area essentially is roughly 15 pips. So again, you're talking 15 to 20 pips max. My thesis was that this market was going to fall through there and not come back. So again, looking at measured structure, remembering what I said, this is a box. We tried to break out of the box, we pulled back. We tried a second time to break out of the box, the market pulled back inside. We tried a third time and pulled back, and we are at the high of the box. The market broke down through that lower swing high as well as being back inside of the high at major round numbers. The bottom of our box is down at Friday's low. Now again, this is an example of being in a trade that runs right from the start. As soon as this market cleared the next quarter level, so again we closed below 25. I was at break even when the market broke through here. Now again, the market, if we go to our left side, our low of the day has already been broken. Now we're back inside of Friday's range. I'm targeting a minimum of 50 pips, but I want to have that market move quickly towards the low of the previous day, which was Friday's low. Now, as again I talked about, traders have asked, when do you go to break even? So we broke the quarter level, and this is in our first 15 minutes. The 15-minute candle closed, we'll just circle that, right here. So again, understanding that when the next 15-minute bar opens and we're below the quarter level, that this market could potentially now come back. So there's 25 pips right off the bat. But again, my thesis is twofold. So we have structure that we can measure. We have a neckline that we can go 2 full expansions, 1 full expansion. We also have a lower structure for that first hour opportunity, again, which took us just below 50, which was actually 100 pips away. But also we have the gap from the breakout on Monday morning, which again was approximately 50 pips, getting traders who were long in this closing area, breaking the middle structure of that close of the U.S. session. So again, traders having a thesis heading in and a plan, so that you're not getting into the market saying, I want 50, I want 25, I want 125. I pre-programmed my trade for 50 pips on this trade setup. Now, as the market came down and went sideways in that second candle and it broke through, my target, this trade filled my target right off the bat. And I was out of that trade, and actually there was for some reason, instead of 50, I was filled at 47, so I don't know if it was a quick wick or what happened, but I noticed it was a 47 pip profit on that trade. And the early session from Asia was 31, 47 in the first 30 minutes, and at that point, obviously, the market did continue to go lower. And at that stage, I made the decision to not follow any of that. I had some other things happening here with kids in school and sport. And I just thought, okay, first 30 minutes, 47 pips, I'm done. There's going to be more trades later. I'm done for that session. Now, unfortunately, the market did give lots of other movement and continued to fall throughout. And again, coming back to just the basics, we talked about the high and the low. This is an example of a market that broke out of a 3-peak formation. And now, again, this is a high of the week setup. We had where I was taken out of this trade was actually a measured move for a continuation of that whole breakout down. So you'll see the consolidations and the continuation. So obviously that could have been an even bigger payday. But again, making a plan, I had it pre-programmed in. Profit target was taken, and I sort of recognized this after the fact, but it is what it is. And again, 25 to 50 pips at the first hour of a trading session isn't so bad. So we head into our next gap time, and we have our 4-hour low taken out in that next 4-hour candle. So again, if I just draw our 4-hour high and low, the beginning of that 4-hour cycle, we'll just find it here, this full candle, beginning of the next 4-hour window. So again, they go up and make a high before coming down and taking out the low of the previous 4-hour candle. We now have hourly, 4-hour, probably 15-minute traders in the market. And this is before, again, we come to our U.S. session. So again, understanding that if we project that high across, that high itself is the high of the 4-hour candle. Anything above that, of course, is going to trigger other time frame traders anyways and hit stops. But as we head into the U.S. 12 candle window, we now have our low and our high of our 4-hour window. And again, we talk about the master pattern, this creeping trend up, 3 pushes up, 1 push, 2 push, and a 1, 2, 3, culminating at the high just as our 12 candle window opens for a stop hunt down. So our expansion, our range expansion clears out the higher lows. We hit the stops, and they move up immediately and hit the stops and trigger breakout traders on our 4-hour, 1-hour, 15-minute traders. This is again in our first hour. Now, I was not home. I was at sport when this first hour was trading. But I did come home when this market came up the second time to the peak in the US 12 candle window. So again, traders have asked, where do you get in? How do you get in? High and low of the day, we're looking for engulfments, pin hammers. Now, all of these trades, even the breakout trades, will have engulfments. Now, round numbers are key, and understanding that, if you're getting in somewhere in here, okay, if you're in the move back to the high, that's one thing. But again, understanding your risk reward. So if the high of this trade is at 59 and you're looking for 25 pips, you need to be getting filled at least at the quarter level prior to that level, because the market may push up into that peak without taking out the high. But this trade gave us a great entry engulfment of 4 bars after hitting the stops. The pin is the key. Now, again, I made a decision on this trade because of the timing and how late it was to take 25 pips. Now, I expected that they would go back down to the low of that where that leg started, but again, this happened fairly quickly, and the market took me out with 25 pips, and I was happy. It's 10:30 at night here, and I've been up since about 4:30 yesterday morning, and again 47 in London, 31 in Asia. That tipped me up just close to 100 pips for the day. It's a very good day. I'm done for the session, done for the day, and this is prior to New York trading. The bull doji at the New York Open is what completed the move. So again, the market breaks down to that quarter level, but also when New York opens, I'm at break even regardless. So of course this opportunity was 50 pips, but again, 25 in 15 minutes, I'm happy to take that. And obviously there was other trades that came later in the session from that original trade. That was the high of the session. But in some cases, when it's late, I'm tired, I'm not necessarily going to be wanting to sit around for another hour. I could leave a trailer in. Sometimes I've done that, and you get stopped out at break even before it moves or it reverses, whatever. I like to go to bed with a clear plate. I know there's going to be 25 to 50 pips pretty much every session, and that's the decision I made in live time. Key important thing though, stops were hit. They hit the stops in the bottom without taking out the low. They barely tap it. There was obviously 25 to 50 pips right off the beginning. And again, as I mentioned, I wasn't home. They drop it down and clear out all the higher level lows who are on this creeping trend. It goes sideways. If you have taken that trade, again, the same principles apply. Okay, 1 push, 2 push, 3 pushes at the high. The engulfment of the bull candle, it's a 1-bar stop. When you see this setting up, I'm always trying to get filled at the numbers plus the spread. And again, you're talking 15 pips and targeting at least the higher lows, and in some cases, this is a great example. Okay, understanding where you're at 50s, major round numbers, 50s and zeros, the market may just pin down there and pull back. So if you don't have a profit target programmed in, this market can reverse, and that's a 25 pip difference right away in 1 minute. And often that will be within 10 seconds that reversal occurs. But the same principles apply. 3 pushes into a peak at the high after the creeping trend up. And again, this is an example of a stop hunt without taking out the higher low on traders that were short prior to the session opening. So again, remember, we have other time frame traders in the market. And this initial burst down is the stop hunt into traders who are in profit off the bottom. They go back up and make a new high. They trigger other time frame traders. They stop out 4-hour traders or 1-hour traders that might have been short already. They come back down, work sideways into consolidation, 1 push, 2 pushes, and then 1, 2, 3 to the high engulfment of the upper structure rate at round numbers for a 50 pip move down. I made a decision because of the timing window. We were getting into the open of New York. As I'm in this trade and I'm only at the 25 pip mark, and on the open it literally took me out straight away. That first minute moved up and down quite quickly, and I was out of the trade. So again, I programmed my profit targets as soon as that market cleared down and the timing window, we're in the 15-minute bar. I'm watching the clock, and as we get closer to the end of the 15-minute window, I'm at break even, especially when New York is about to open. Obviously, that first hour trade, there was a fast move up to the high for more than 50 pips. But again, you're not going to be at the screen for every single trade. So next day, Asia, again, the same process. Where's my 4-hour high and low? So again, I want to know where the other time frame traders are getting into the market, who's caught when we start our session, what major round numbers we're at, and then I watch how price behaves. So we have our 4-hour high and low. So again, this is outside of our earlier 4-hour bar. The last 4 hours of the U.S. session, there's our 4-hour high and low. As we head into Asia, the rollover time, the market pushes up into 50 with 3 pushes, 1 push, 2 pushes, 3 pushes in our first hour. So we get the engulfment. Again, I'm not trading in here. This is where I'm getting information, though. So we've triggered other time frame traders, but the market has failed to follow through. We have a smaller structure at the high of a box, a 50 pip box. Our second hour begins to trade, and they go back up 1, 2, 3 before engulfing. So again, that second hour now has worked back into the high before engulfing, and then proceeding to work down 25 pips before pulling back. Now again, we're inside of the high and the low. We've hit this. We've potentially triggered breakout orders on the upside. The market goes up right away into the open, straight down into traders that are long at the quarter level. So again, if you're in early, the market comes right down and hits the stops, then proceeds to work back up into the high. 1 push, 2 pushes, and at this stage, I'm sitting there and looking, saying to myself, okay, the market's been down. We're not looking at our other time frames. I'm strictly looking at highs and lows. But that's their second push into the high, into round numbers. They haven't taken this out. I've got a low of the day stop again. The market very rarely ever lets the first mouse out of the market. So if you were long on this engulfment, 1 push, 2 pushes, that lower high, they go back for a third push. This pin and little inside bar is the dead giveaway. You will see this over and over and over again. And then the follow-through candle that doesn't follow through. Short at 51. The market drops down straight away and hits the lows from the day, the low of the day, not only the low of the session, but the low of the day. Now, at this stage, I had left my target in for 40 pips. And the reason why is because the 4-hour low was just above the 00, and it did not trigger this. So our 15-minute bar closed. I'm at break even. Again, this is 15 minutes up, 15 minutes down. 30 minutes into the open of the session. Again, 1 push, 2 push, 3 pushes, engulfments. I was short at 51. I got in prior to this because I recognized the setup, the inside bar, the pin. Once the pin was there and the consolidation, I was in the market with my stop above the pin. When the market broke through this middle structure for our M formation, I was at break even. So 3 minutes, I'm at break even, but the market did not hit my 40 pip target. It missed it within a few pips. The next 15-minute candle opens up and pulls back right away. Now on the 15-minute chart, the second 15-minute bar was an engulfment. We'll take a look at that. So again, the second candle engulfed the bull pin bar. Now, again, there's the thesis with the longer time frame was that this may follow through all the way to the previous day's low. But again, we're trading into major round numbers. I also know that the typical movement in that first hour for the Asian session is going to be 40 to 50 max, or 25 and 25. Like very rarely, unless we're in a blow off or a capitulation on a peak formation, this market usually will trade in a 50 pip range. So again, it comes down on that second retest, hits my target, done. Out of the market with 40 pips. Now, I did watch this pull back a third time and trade into the low for the third push down. 1 push, 2 pushes, 3 pushes. And I saw the engulfment pin hammer, which I did not trade. At this stage, again, I had 40 pips in the first half an hour, and I made the decision to not follow this for just partly, again, I'm not crazy about going back in. There was a great opportunity. This is a great example of a W formation, shortened W, peak formation. They put a low in place. They work it a second time. They give you the shortened W inside of the peak formation low on 3 pushes. There's our ascending triangle. The minimum target on this trade would be 2 times that expansion, which was 50 pips. But obviously that market had potential to go even further from that the middle structure down, which it did 2 full expansions. This market actually continued to go higher, which again, if we look back at our other time frame, we know that there was the pin hammer short. So again, once it went past the break-even area, they were potentially going after. So the shorts were in somewhere around 67, 66, stops above double zeros. And you'll notice that the pin goes far enough just to stop out the top of that bar where traders were short from the U.S. session. So again, understanding where is the money. As I've talked about, there are lots of trades, and some days I will stick around and hit these trades. And again, I talk about not using trend lines, but looking at trend line breaks. So we get 3 pushes down, 1 push, 2 push, 3 pushes, and the continuation. So little things that can alert you to the trades going the other way. My object is not to trade every move in the market, but to take certain setups and be able to scale them up in size. This was an excellent trade going in the opposite direction. But again, that's 4 sessions in a row with between 25 and 50 pips, and the market offers these opportunities every single day. High and low of the day, breakout, pullback, continuation, breakout, pullback, reversal, breakout, pullback, trading range. And again, the market first 15 to 30 minutes will put in a high or a low, and will often for the next 15 to 30 minutes work in the opposite direction. So again, that first hour put a high in place. We had a 50 pip box. It then proceeded to put a low of the day in place, and then continued in the direction that they intended. So they expanded the range on the top side, hit the stops, expand the range, and they worked their way down, hit the stops, expand the range, and then trend the market. That master pattern shows up everywhere. London yesterday offered a brilliant trend trade, and again, that was after it had worked the high of the day in 3 pushes. So lots of opportunities in this market. We'll take a look at the euro and gold, the pound from last night. Just looking at the euro on the 1 minute again, 1 minute, 15 minute, I like to use the 1 minute when we're at the extremes at the session opens. So again, understanding that other time frame traders, when they're triggered into the market, it triggers breakout orders, it hits stops, and again, the market has a couple of reasons for doing this. It gets other time frame traders into the market. We know that it activates stops on the other sides of those time frames, 1 hour, 4 hour. But it also stops out traders who are already potentially in profit. Right at the beginning of the US 12 candle window last night, we had a W formation at the low of the day with the engulfment. And again, high and low. High and low. We have our 4 hour high and low, and we have our low of the day. The market expands the range, engulfs, works its way back up in 3 pushes before engulfing. So the market puts a low in place, comes up, hits the stops, puts a high in place, but then proceeds to go higher. So again, traders who traded that first hour, there's a 25 pip move at the beginning of the Europe US 12 candle window, but they continue to go higher. And as we head into our equity hour open, which again I'll mark off here, so again the first hour for the euro, there's a 25 pip move. Now I don't trade the euro. This is the first candle of that US equity market open. And again, the equity market will tend to usually take the market back to one extreme or the other. And in this particular case, the market comes back up, and you'll notice 1, 2, 3 to the high with a pin hammer. This pin will often be the extreme. They pin it one more time. Again, this puts a high of the day in place. So New York extends the high out. They come back. They work down in 3 pushes before consolidating and retesting the high before dropping down. So again, understanding that whole upper structure, that 1, 2, 3 bull candle structure at the high, once that's broken down and engulfed underneath, this is our high. They come back and retest it. They consolidate underneath the high. They retest the high. And then they engulf the second shoulder of retesting that. So again, the market put a low in place. They put a high in place. They extended the high. The equity market opens. They extend the high one more time. They consolidate off the quarter level inside of that range before retesting that high one more time. So working the high, working the high, working the high, working the high, dropping down, consolidating, middle structure in place. Once that middle structure is broken, if you're already in the market, I'd be at break even on the break of this pullback. If traders were entering into the market on the right shoulder on the shortened M, again, there's the potential for a measured move. We have the low of our rectangle. I'd be aiming for a minimum of 1 full expansion of that range, but in most cases 2. This market came down 1 full expansion, consolidating for dropping down and pulling back at the major round numbers. If you weren't at a second full expansion and you were holding on, you can see this consolidation underneath 50 forms a W reversal pattern. So again, just talking strictly from number to number, this is a 25 pip move down. And the difference again with the euro and gold, again, you can see the gold will move 25 to 50 pips in 5 to 10 minutes sometimes, whereas the euro may have taken an hour to get the same distance there. But the same principles apply. We had a high and a low. The market broke through our 4-hour high and low on the opposite side, triggering other time frame traders. So we hit the stops, we expand the range, they come up, they work higher, they hit the stops at the open of the equity hour, they stay up high and consolidate, they retest the high for a double top formation before dropping down, consolidating, and falling away, taking out the low of the day and extending the range downwards. Looking at the pound, so again, just marking off our lows. When we have the pound, we have other time frame traders in the market with our pound. So we have our 4-hour bar. We'll just mark off the other 4-hour low. So you'll notice again towards the closing of an hour or 4-hour, if the market pulls back inside, the next block of time opens up. The 4-hour, the 1-hour open up, and they proceed to break the level. So we know 4-hour and 1-hour traders are in the market. This is during the Asian window. They come down, make a low of the day before pulling back inside. The next 4-hour window opens up. We'll just put our little candle here. Our next 4-hour window opens up, this bull candle, and again makes a high and then proceeds to take out that high, which again on the 1-hour, 4-hour may end up looking like a pin bar if it stays as the peak formation. We know there are stops underneath. We know that other time frame traders are now in the market, that high has been broken. And the market again heading into our 12 candle window trades through the quarter level before working down and hitting the low of the day. At the low of the day, we get an engulfment of a 1, 2, 3 reversal. We get the engulfment of the small bar after they've hit the stops and taken out the low of the day off of double zeros. The market then proceeds to straight away move up, move sideways. So again, this sideways price action inside of a peak formation, okay, is the giveaway. They consolidate inside of the peak formation. We get another pin hammer, and again, this is at the end, 2 minutes before the end of the first hour. So again, the difference for me with gold is that gold tends to move quite quickly in 25 to 50 pip movements, as opposed to maybe the euro and the pound taking longer, which again, that's just preference. There's nothing, not to say that it's better, but we have our high of the day. And the high of the day at this stage is of the Europe-London window. Obviously, we have highs up at the 4-hour and 1-hour bars all the way up. We've triggered 1-hour and 4-hour time frame traders by shorting the market or by this breakout. Then we get our engulfment off double zeros, the sideways price action, and again into the open of the London window, the fast stop hunt move to the high of the day, hitting stops as well as triggering other time frame traders. So again, an example of a equity hour fast move, virtually, not quite 50 pips, but a very fast, quick move. You're in and out of the market with pips. Done. You can scale these trade setups in size. Pin hammer engulfment, pin hammer, and a fast move back through, and understanding where is the money. So there's people who have shorted this move. There's people who were already short from the Asian session in that move coming down. So again, trigger breakout traders, hit the stops. We get 3 pushes in London, putting a high of the London session in place. They work the high, pull it back. This engulfment establishes a highs in place. You'll notice that our other time frame stops have been hit. They're just below 50. We have our small bar at the high. They work back into it with 3 pushes. 1 push, 2 pushes, 1, 2, 3 engulfments. A small little doji as a middle structure for an M formation inside of a larger pattern. So we've got 3 pushes into a peak formation, a micro M structure, and a 25 pip stop hunt down inside of traders who were who were long off the fast move up to the high. So again, understanding nobody gets a free lunch, regardless of the pair that you're trading. So round numbers, high and low formation, expand the range, hit the stops, trigger other time frame traders, engulfments and pin hammers, learning to take a profit, understanding when the move may be over, and even just timing wise, understanding that every 15-minute cycle. Okay, so this bar ends the 15-minute cycle. The next 15-minute cycle starting, it could be going the other way. So hopefully you got value from today's video, traders. Highs and lows, round numbers, timing window, other time frame traders triggered into the markets, engulfments and pin hammers, 1-bar stops, program your profit targets, or make sure you're taking some money off the table if you're going to leave trailers in, partials, whatever. That's entirely your decision. I like to be in and out, ideally in that first hour, maybe second hour, depends, but first hour offers lots of opportunities on gold. Be done, go about your day, come back the next session and do it again. So stay disciplined, traders. Keep it simple, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.